Welcome to the midweek roundtable. I have my usual co-host, Jebson and Ari. My name is Roger Scott. This is completely and utterly unscripted. We do not prepare for this. We just want to get inside each other's heads and have you guys kind of peek in and get an idea for what we're talking about, what we're looking at, and so forth and so forth. So, Jeff, how are you doing this week? I should start there.
I'm really great. How are you?
I'm doing well. So what are you thinking this week? We've got a lot of earnings on the plate. We've got bank stocks coming out. Then we got more financials, insurance companies. What's on your radar right now?
Well, the market is very much in we've gone back to almost like pre-COVID type of trading where we're in a slow and steady bull. Volatility is sub 20. We're seeing muted moves in the indices under 1% for most days, which was nothing like 2020 and a lot of the first quarter of 2021. And tech made a huge comeback. NASDAQ came back with a vengeance. We started seeing money coming into that. Banks came out with earnings this morning. JP Morgan crushed, but the stock's down slightly, about 1%, maybe a little less now. I haven't checked recently before the market opens here. Goldman had also an impressive quarter and the stock's trading up 1%, but both are kind of like nothing burgers in terms of post-earning stock trading. Under 5% doesn't really move the needle. The big thing that I'm seeing, that I'm paying attention to, is that whole reopening of the economy trade that everybody went nuts for, and we were kind of like, whoa, everybody slowed down on that, is starting to really fade. With this Johnson & Johnson thing, the idea that people are going to just go back and live exactly the same way as normal. We've been proponents of this for basically since COVID started, since we've been talking about it over a year. There's no scenario where where society goes back to what it was pre-COVID within the next couple of years. There's just no scenario. And this Johnson & Johnson blip with the vaccine, and I don't think it's that terrible. I mean, I'm not a scientist. I don't like to get into like these scientific discussions because I'm not qualified to. But what it shows you is that even the slightest bit of turbulence with the reopening creates a bit of a panic again. And so you started to see stocks like airlines, cruise stocks, retailers start to get smashed yesterday. And we saw a bit again in some of the old these but goodies, the stay-at-home stocks. So what do you think about those?
Well, it's interesting that you mentioned that. I was making comments about this, and it looked like a lot of these stocks were running up ahead of time in anticipation of earnings. The volatility wasn't there, but the trading action was. I mean, and that's one of the things I was talking about to my guys the other day before earnings came out. I said, even though earnings may be good, if you look at stocks like Chase, JP Morgan, if you look at stocks like Bank of America, while earnings may actually be reasonably good, they just look so overextended. So to
that's
talk
the market in general, though. I mean, I don't know if you can find like a sector that doesn't look extended, right? I mean,
no. What I mean by overextended, I'm being a little more specific. If you look at the technical action on them, they are grossly. It looks like somebody. See, and actually, that's one of the topics I'm going to be doing a video today on how to trade stocks when markets are overextended, what to look for. And what I like to, and this is actually more of a technical than a fundamental discussion, but what I like to look for, and I actually was just all over this the last few days, is when markets get really, really up there, like it looks like just somebody just pulled it up. I look for ascending triangles. I look for congestion patterns. And I look for assets that have a flat top. So we already know the relative strength and momentum is there. Obviously, if markets are at an all-time high, there's plenty of liquidity and money coming into the market. Right. So what I'm looking for stocks that are that are pausing in the extreme and are not making higher highs, that are just kind of flat topping.
Yeah.
And what I did actually yesterday was I showed a video, and I actually specifically showed. I did exactly what we're talking about, but I did it beforehand. And I did a video on 3 stocks, and I showed 3 bank stocks that were overextended and 3 bank stocks that I thought were primed for moving higher. And the 3 stocks that I chose were all based on technical price action. And the banks that I did not choose were like Bank of America, Chase, because they just look like they were diverging. The RSI is just too much. They just need to pause before running up too much. It's like run up before earnings. Yeah. So it was very technical. It wasn't. It was more short term and technical versus the discussion, the broader discussion we're having right now.
Right on.
But you brought up a very good point. Now, in terms of the other sector, you kind of touched on consumer discretionary, and which is really big because right now with the COVID and the J&J, and you're absolutely right. And you and I have been talking about this. It's not, I remember these discussions we were having, Jeff, like 6 months ago. And we were saying how people think it's going to be it's going to be binary, 0 and 1. It's going to be, we're closed. The world is closed.
The light's on or it's off. Yeah.
Right. And the world, it just doesn't work that way. We didn't get in. And remember how I said it, we didn't get into this in one day. We're not going to get out of this in one day. It's going to be one leg at a time. And it's going to be 2 steps forward, 1 step back. And we're seeing that with this Johnson & Johnson, which is really interesting because a lot of people were getting really excited about that specific one because it's, the one and done. And again, I don't want to get into long conversations about vaccines because you and I are not experts, but I'm talking more of the impact on the world and the impact on society and the impact on the stock market as a result of these broad news. So we're not really talking deeply into the nuances of the.
I don't care about the efficacy of which.
Right.
I don't know.
Right.
I can't talk about that. So why bother? No one can, but people love to spout off like they're experts on that efficacy of drugs. I don't, is 6 people getting sick out of 6 million a lot? Probably not. You probably have as many people get blood clots from taking Advil on a percentage basis, many over-the-counter drugs. So I know that there's got to be some sort of hard guideline criteria to that. I think in the end, they'll probably get it right and get it back out into the market. But that's not the point. The point is that as soon as there's a little bit of turbulence, people recede and people get unconfident and they say, you know what, maybe we're not going to do this. And then, offices, the plan to reopen the office isn't so great. And I just feel like there's still this, even with the vaccine, there's such a lingering damage psychologically to society that people don't trust the media. They don't trust that COVID's gone away. They don't trust that their vaccine has worked. They don't trust. And when you have that breakdown of trust, it's hard to go back all in, full boat, everything, all systems go. You want to see a stock that got ahead of itself that's getting whacked today because reality is setting in? Look at Bed Bath & Beyond. That's a short from Money Links. That's a case. Okay. That's a case of people, the reopening case getting ahead, kind of GameStop-ish, but not as sophisticated. And they had to actually report earnings. What do they make in the real world in terms of income? And it was bad. It was so bad. And there were even worse guidance. The stock's down 10% in the pre-market. So I'm looking at some of these things and I'm saying, okay, there's stuff that's extended. And in the short term, you can make money, but there's stuff that's just so wrong and so based on this new reality coming to fruition that you could get so hurt in. And that's the stuff that, I try to seize on from the short side.
Yeah, absolutely. I could not agree with you more. And it's interesting that how you described it, how the world is still kind of sort of on edge. I call it like the world, and literally, if you think about it, the world is in a post-traumatic stress disorder environment.
That's so well said. We all are. Collectively.
Of course. Look. 3 years ago, 5 years ago, 10 years ago, if somebody said to you, there's this bug coming out and it's a strain and you'd be like, yeah, okay. Now, when somebody's like, look, there may be another variant of this COVID. I mean, everybody's become a pharmaceutical expert, right? I mean, you know what I mean. Everybody's talking about things that people never talk. Ooh, don't take this one. The side effects. Right? Look, the bottom line is the world is very, very sensitive, raw and sensitive. And it's going to take a long time to get out of this. And the truth is, Jeff, I was reading about Japan 2 nights ago. They're now in their 5th wave. Brazil is doing terrible with COVID. There's still parts of the world that are very, very strongly impacted. I mean, look, just to give you a real basic example, to get to Bahamas, I had to take not a rapid test. I had to take the long kind of test where you get results in 2 days. I had to upload it to a Bahamian website. I had to show this travel visa.
Come back too, right?
Are you kidding me? I got to know. I got an appointment at 12:10 to come back into the country. You get 5 emails from literally 5 emails from airline companies. They want to see the actual paper, not the. I mean, it's like going back to Nazi and showing them whether you're German or not. I mean,
I hate that.
That's the world we're in right now.
It's reality.
Yeah, that's reality. That's reality. And I'm talking about a vacation destination that wants people to forget that there's COVID. It's masks everywhere. This is reality. And it's not going anywhere. It's going to be one step back, 2 steps forward. But this thing created.
We've been saying that the whole time. We've been, I don't like to, I do. I'm patting ourselves on the back here. We've been saying that the whole time. People, and that's important. And it's not just important because people are like, oh, well, whatever, you got certain parts of this right. It's important because if you're making long-term prognostications, and I'm not talking about trading, because we've both been nimble on all sides in all sectors when we see technical breakouts, technical breakdowns. That's not what I'm talking about. I'm talking about putting long dollars into a thesis based on something that could be factually incorrect. Right. And that goes back to my low-hanging fruit thing. Like people talk to me about this Coinbase IPO that's coming out today, right? Coinbase is this company, whether you like them or not, is making massive money out of the blue. They've been around since like 2015.
Yep.
And they're making as much money as the New York Stock Exchange, basically. Like they make crazy dollars, and they're getting priced at a decent price point. It's not like they're asking 100 PE. It's at a 20-something PE.
Right.
But the growth is like 50% every year. They're making so much money. Now, I think there's going to be competition to that, but how can you ignore the low-hanging fruit of this secular shift into blockchain, into coins? I can't ignore it. Whether I want it to exist or not doesn't matter. The reality is that people are interested in altcoins. People are interested in Bitcoin. They're interested in Ethereum. I got interested in Ethereum. I got interested in a small way just to follow it. And I'm looking at it and I'm like, it's hard. It's become an asset class is what I'm saying.
You look at magazines. I was on the plane looking at magazines, and there's an advertisement: Dow Jones, Bitcoin, invest now. You didn't see that 5 years ago, 10 years ago. Another interesting thing, and I find this interesting because of the way people are perceiving this.
Yeah.
When you tell people, and this is really fascinating because it just shows you how people don't understand. Really anything. If you ask 90% of people about Bitcoin or cryptos, they don't understand how you have to open the account, the setup. They don't understand anything about it. To them, it's just, some digital currency that lives in the computer and it's invisible and it can't be tracked. That's all most people know. And now these NFTs came out and they're gaining popularity. But what a lot of people are doing them is they're putting them in the exact same boat as a cryptocurrency. But they're an extension. It's like a brother or a sister. Not building on top. And they're saying, well, now you're having this and this is going to be the end. It's too much. But no. This is, to me, this is not, here, let me explain it to you in a way that it'll be easy to understand for everybody. People are confusing this NFT. They believe it's vertical growth with cryptos, that it's extending this way. In my opinion, this NFT is extending crypto horizontally. It's creating a base. It's creating more ways of using it, not extending upon the original Bitcoin trading idea.
It's a green shoot. It's a green shoot. And that's a good thing. That's actually like a really bullish thing for the entire concept of blockchain, because you're going to start to see in the next 5 years all kinds of green shoots that we didn't anticipate these things being used for.
Well, I gave somebody an example the other day and they were like, oh my God, I never thought of that. Let me give you an example, a real good example. Folks, this is real. This is happening, and this is happening because of digital currency. You may or may not realize this or not. When you go online and you see a picture and you cut and copy that picture and you paste it somewhere else, you're going to be instantly charged for that picture, because it's going to have an encryption and it's going to have a number associated with it that no other picture will ever have. And as soon as you move it or take it or do anything else with it, the owner will be notified via digital means of everyone where it's taken with complete transparency. movies, downloads, magazines, everything digital is going to have a unique identifier connected to it. It's like you said, Jeff, a few weeks ago, we were doing this, and I won't forget, it's stuck in my head. You said it's everything's going to be tradable.
Yeah.
Remember that? Everything is going to be tradable because it's going to be neat. Yeah. I was like, wow, he's right. So when you tell people that, they're thinking, oh, we're going to be trading these NFTs like Bitcoin. No, this is reinventing privacy, security, digital encryptions as we know it.
It's a central, like, think of blockchain as like if the New York Stock Exchange existed in everything. It's a central database it's a ledger for transactions. So you can have a ledger now for every transaction ever, like in anything or whatever. Right. And so that's pretty cool. And that's powerful. And
can you imagine?
Coinbase has a massive head start, just to go back to that IPO. They have a massive head start in that. They could be better, but they have that brand identity already.
Do you know, in my opinion, who's going to be very instrumental in investing and growing that industry? The movie industry, the entertainment movie industries, or media companies, obviously. I think that's going to go very, very big. I wouldn't be surprised. If we saw these NFTs come out more from if media companies got into the tech and started developing or backing out or spinning them and creating their own brand of NFTs.
Individual artists, individual actors now are going to be able to control moments that they have and price it out so that they, a lot of people are like, wow, Brad Pitt got paid $25 million to make that movie. But as you time slice these things and have like real-time pricing on these different clips, maybe 25 million was half as much as he should have made. You know what I'm saying?
So it'll be very, it's going to be very hard to rip artists off. It's going to be, you're going to see a reversal of swing. A lot of artists, people, you ripped me off. You ripped off my movie. You downloaded my movie on Pirate Bay 1 million times. Those days are going to be, those days are numbered. It's not tomorrow, but those days are numbered. And that means a lot more money, legal money coming in for the entertainment and publishing companies and so forth.
Can I ask you a question?
Yeah,
it's go out of left field, but it's something that I've been lamenting on since
Sure.
I want your opinion on it.
Yeah.
So 60 Minutes had Jerome Powell on 60 Minutes last weekend. And I was angry watching this interview because this is something we've talked about a lot. And it's a trade that we've been involved in with the inflation trade. And he was sitting there and looking at Scott Pelley in the face and saying, no, there's no, it's temporary. It's not. I'm like, dude, Scott, put it on this guy. Ask him, have you been to a grocery store and tried to buy a dozen eggs, which are now $7 and used to be $2.50 12 months ago? Have you tried to fill up your car, which is 50% more expensive to do? Have you tried to buy new patio furniture? Have you tried to take everything is like 30 to 50% more expensive. And this dude is sitting there looking at America in the eye and saying, there's nothing. No, we're good. I mean, to me, I was just like, what? Sorry, I had to get that off my chest.
No, it's actually a perfect. I was about to talk about interest rates, so it's a perfect gateway. I did not see it. I wish I did. I missed it. I usually watch 60 Minutes. I usually record it and watch it later. I'll check it out when I get back home. But I will. I'm gonna watch it. Very, very interesting. And he really sat there with a poker face and.
And they give him free pass, like the media, like certain people, they're little darlings, not to get too political, but they're little darlings. They just like, okay, like, let's give, you and I have been skeptical of this guy on a lot of things, but it's like,
don't get me started.
They give him a free, for me, it pisses me off because, we're on the fortunate side of this thing, right? We have assets, we own stocks, we own property, we're on the fortunate side of this thing. But the people on the low end of the spectrum are getting the screws put to them. And to have this guy sit up there and just be like, it's a nothing burger. It doesn't matter. It pisses me off because it's creating this massive dislocation in the economy and creating this haves and have-nots dynamic that's really bad going forward. It's not a good thing for a developed nation to have. And I don't think it's good for the economy. I don't think it's going to be good for the stock market down the line if we continue to have out of control inflation, personally.
Let's talk about that a little bit. Let's get a little micro on that a little bit.
Yeah.
The long bond, and I don't care if you're looking at the 30-year, the 10-year, or the TLT, which tracks the 20 plus. They're all the same. Do you think we went from what 0.93 to like 178 in one quarter? Do you think over the next quarter we're going to be kind of choppy, sideways, wait and see, and then we're going to gear up again? Or do you think what's your opinion on the long bond between now and the end of the year?
I think you're going to see rates go higher, considerably higher in the second half of this year, and that's going to create a massive amount of volatility in equities. If I have to give my macro view, I think
you and I've been hanging out for too long.
Huh?
I said you and I've been hanging out for too long because I'm seeing exactly the same thing.
Which is why you're seeing such a rush. You're seeing such a why do you think we're having all these massive SPAC deals and coin direct listings and all these 20 billion? Why do you think that's happening? It's happening because all these guys are rushing to get into this stable market before things reprice, like before rates reprice, before before the 30-year bond's back at 5%, before the 10-year bond is back at 2.5%, 3%, which is where, based on where inflation is, that's where it should be right now.
I think
at the minimum.
And just to put a little numbers on our discussion, I believe, and correct me if I'm wrong, I believe we're going to kind of drift this quarter unless we heat up really, really badly. And I don't think that's going to happen. I think we're going to cool off a little bit in the stock market just based on the sentiment. And
I mean, the opening thing is good for keeping rates on, for a little while.
Yeah.
For sure.
But ultimately, I believe, and towards the end of the summer, early fall, I think we're going to go above 2%, and I think we're going to end the year around 2.5%.
Yeah,
that's
exactly where I'm at. That's exactly where I'm at. But that's going to cause a lot. That's going to cause a lot of volatility in the stock market.
Yes. Yeah. I mean, you're going
to see margin compression.
Yes. Yeah. Well, look at the impact. Look at just the lack of volatility. Look at the impact it's had on the Russell over the last few weeks. It's like you have to check it for a heartbeat every 5 minutes. It's dead. So and for those of you who are out there at home listening to us, please understand, bonds are a big driving factor for stocks. It goes like this: currencies, bonds, stocks, because currencies are a lot bigger than the bond market, and bond market's a lot bigger than the stock market. Sure. So understand. So there's a huge driver from bonds into stocks. So when bonds get quiet or when they expand, it has a major impact on the stock market. Jeff, before we conclude, you mentioned very quickly about some of your link trades. Give us, and you don't need to give, the hot signals. Just give us an idea of what you're looking at, where you focus, to give us some idea of where, people at home should be targeting their stocks right now.
Yeah. So I've been leaning skeptical of the reopening. I've been long still some tech. I think tech's still a good place to be. Different pockets of it. And I'm very skeptical of I'm short. I've been short. Today we're taking it off because it's a home run now, the short Bed Bath and Beyond, but I'm always looking to scale back in. So we get this big puke down 11% or whatever. Options have triple digit returns. I take it some off, but I'm going to look to re-enter that sort of trade in a couple of weeks as we get a little bit of a drift back up. I think the big thing this summer is everyone was pricing in this like Woodstock summer of love, where everybody's like out just spraying the earth with like kisses and dollars. And that just ain't going to happen. That ain't going to be the case. And when that's not the case, people are going to start to look at when is it going to be the case? And you're going to see some nervous Nellies in some of these names.
Yes. Yeah, I agree. We're going to have a little shakeout. We're definitely going to have a little shakeout. And I don't want to get too bearish because I'm not overly bearish. The market.
There's still going to be Jay Powell's going to still be spraying the earth with cash. That's why your rotation thing is so magnificent, because you're not really seeing like things like die or puke. You're just seeing them pause, give back some of their gains, and then go like, case in point, Russell went up 15%. NASDAQ was flat. Russell came back down to being up 12%, which isn't like a crazy sell-off. And then NASDAQ came up 10%. That money's still got to go somewhere. It's not going out of the market. There's still a net positive flow of cash into the stock market at all times. Yeah.
And it's very typical in a raging bull market to have a very strong sector rotation. I mean, that's what makes the engine hum, Yeah. That's very, very normal. Well, listen, this was a wonderful session as usual. I love getting into your head, once a week, I hope people at home are absorbing this because we have a ton of fun doing this. I absolutely love doing this. Jeff, thank you for your time. For folks at home, for those who want to reach out to Jeff, please feel free. Jeff will not bite, not hard at least. Jeff at joyofthetrade.com. You can reach me at support@marketgeeks.com. I've been using that email for years. It's a quick way to get to me. That's Jeff at joyofthetrade.com and support@marketgeeks.com. And the rotation system that we're talking about, that's the 14-day breakout window. Check it out. There's videos on it right now going online from Wealth Press. Check it out
awesome
if you get a
system. Awesome. I love it, Roger. Awesome system, by the way.
Thank you. I appreciate it. Thank you very much. It's been around. Yeah, we started with $10,000 and it went to over 4.8 million with the stock position alone without the option. So definitely check it out. Learn more about it. Jeff, thank you. Wonderful session. And I'll catch you on Slack and I'll catch you throughout the week. Talk to you soon.
Enjoy the
Bye, buddy.
Take it easy.
Thank you. Bye.